Which is the better dividend stock to buy, Ford or Verizon? I'm going to answer that question in this video looking at several different metrics. So let's get right into it, starting with the dividend yield. Verizon offering a dividend yield of 6.28%, more than double the 3.06% offered by Ford. But that's not the only thing to look at when making this decision. Moving on, let's look at the payout ratio. The dividend payout ratio measures the percentage of dividends a company pays out from its earnings per share. So the lower this percentage, the more sustainable the dividend is and the more room for dividend growth in the future. So in this regard, Ford offering a dividend payout ratio of 20.08%. And of course, you see a blank here because Ford actually delivered a loss on the bottom line in its most recent quarter. So it was negative in earnings per share in its most recent quarter. So you see a negative here, and that's not good news for dividend investors. But Verizon at a higher percentage of 50.83%, but at least Verizon didn't have a negative earnings per share quarter recently. Moving on, let's look at revenue growth going back to 2014 for these two companies. And if we ignored the post-pandemic trends, if we look back between 2014 to 2020, we see similar lines here in terms of revenue growth. You cannot expect these companies to grow quickly. I would not expect revenue growth from either of these two companies above mid-single digits, right? I would expect around 5% or below in terms of long run revenue growth for each of these two. And in fact, looking longer term, I would say Verizon has better revenue prospects, right? Ford, yes, they're going to benefit from this ramping up of production of electric vehicles, but it's really just going to take the place, it's just going to cannibalize sales of internal combustion engine vehicles. So overall, I don't know if it's going to increase revenue growth longer term for Ford. Meanwhile, Verizon is benefiting from this trend of incremental devices being added to consumer wireless accounts. Before, you mainly just had a cell phone or a smartphone on your wireless data plan. Now people are starting to add, your smartwatch to the data plan, or maybe an iPad to the data plan, right? And these are incremental devices onto the plan. That's going to be an extra 10, 20, maybe $30 per month to your existing cell phone plan. So it's a way that Verizon can kind of boost revenue growth a little bit in terms of, and that's not going to cannibalize, you're still going to need a smartphone. Your smartwatch is not going to replace your smartphone, at least not anytime in the near term. So that's going to be an incremental boost to Verizon longer term. The next thing I wanted to look at is earnings per share for the trailing 12 months. And going back to 2014, Ford has hardly increased its earnings per share in the trailing 12 months at 222 versus going back, it's just a little bit above where it was in 2014. Meanwhile, Verizon has shown very healthy earnings per share growth going back to 2014. And of course, if you're investing for dividends, you need earnings per share. And if earnings per share is going up, that can create room for dividends per share to go up without impacting the sustainability of those dividends, right? You can't increase dividends per share above your earnings per share because that would be unsustainable. But if you're increasing earnings per share, you can increase dividends per share proportionally, and that can still be sustainable. So this is good news, better news for Verizon investors looking for the dividend in Verizon stock. Finally, let's look at valuation between these two. Let's see which stock is more expensive. And I chose to use the price to earnings forward ratio. And they're both trading at reasonable valuations. Verizon a little bit more expensive than Ford at a PE of 8.764 compared to a 7.579 of Ford. However, in my opinion, Verizon has deserved this premium valuation over Ford. In fact, the premium is hardly that much. It's just 1.2, maybe let's say that's what, like a 15% premium to Ford. And given Verizon's better near-term and longer-term prospects, I would say Verizon deserves the premium valuation over Ford. And so to answer the question, which one of these two is the better dividend stock to buy right now, I'm going to say Verizon. Verizon is the better dividend stock to buy right now. All right, that's all I've got for this video. Thanks for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.